Hello and welcome back to Green Pips FX. And on this video, I'll basically be teaching you guys this powerful structural schematic that will allow you to catch very big moves in the market. Now, this structural schematic being example, if you're having a bullish market like that, and then at some instance, right, you have price, creating a high, right? Coming down to create a low, attempting to do what? To break bearish with this break of structure right here, and then instantly shifting bullish once again, coming back for the retest, and then from there, simply running bullish in that sort, right? This is a very powerful structural schematic. Why am I saying that, right? This is where the Elliott wave theory applies, right? So when prices constantly creating bullish structure, right? As you can see, we have a series of higher highs and higher lows being created, right? And then lo and behold, price now attempts to break bearish, price now attempts to break bearish with an attempted break on a low, right? And then this new low that is formed becomes yet again a strong low and comes out to take this previous high here, right? This is a sign of a very, very bullish market. And with this retest in here towards an area of demand, you can catch a very strong push to the top side, because this price is showing you what basically just happened is price was pushing bullish, right? Now when price is pushing bullish, then we know that there's there is sell side liquidity being created, right? As well as buy side liquidity on tops, right? Boom. So we have buy side liquidity and sell side liquidity, right? Now buy side liquidity we know exists above these highs, right? And it's constantly being taken out, right? It's basically just constantly being taken out. And once this buy side liquidity has been taken, right, there is a continuous formation of sell side liquidity in each and every one of these lows here, which is not yet taken, right? And then there's a trend line liquidity also being built in here, right? This is a very powerful tool to understand that price will come down to attempt to grab these orders, right? Resting below these lows. Right now, this break can, it can take out a single low or a double low or whatever, right? But it's gonna break bearish and then instantly break bullish, right? So with this instant break bullish, with a body of a candle closing above, and then that retracement here, which is needed to give us these SMC entries or MMC footprint entries to catch this price to head to the top side, is very, very crucial to understand. Now with this concept being said, let's now go to the charts and see how exactly this happens, right? So first and foremost, we have this UJ pair, which was, just for educational purposes. So we had this trend here, and previously we had this break here that this low here was taken out by this major high to form this major low, right? And then price within that retracement never came to mitigate this overall last that last up move before the down move that caused the break of this structure here, but instead it just came and mitigated this area here, which is part of a larger portion of price, which represented the last up move before the down move. Now, however, we had very huge areas of imbalances in here that we knew at some point they were going to be mitigated. So when price did this, came up, created this high as a liquidity high, of course, price came down, took out this low, came up, just took out this high, and never reached this area here. And then price came, broke these intermediary lows in here, and then price just went bearish from there. So we had this whole area here of imbalances just left behind. So we knew that these imbalances at some point they were going to be mitigated, but what point is that? We never know for sure, but we just knew that in the near or the far future this mitigation was going to happen. Now lo and behold, price came down, formed this low here, and then created this intermediary structural break here, right, to indicate that price is going bullish, and we're expecting from this bullish price action to come and fill out these imbalances here. And that's what price did. So price came up, price has now filled these imbalances, and we have potentially refined this area of supply here and see if we can get a reaction from this area of supply to go bearish from there, in accordance to the Japanese currency index, right? Which was bullish. Price made a high, we had a stack of sell side liquidity here. Price comes down, takes that sell side liquidity, comes up, leaves us that bearish confirmation that the JPY was pretty much gonna be weak. So there's the JPY going bearish from there, and we had this whole area here, which is actually refined to this area here, the last sell to buy, right? And price has reached that area, so of course we're expecting some breaks here, and of course a bullish push from that, which also means that a bearish push in the JPY pairs, right? That's why I said that I would look for sells in here, but if they are to present themselves, then that will be very cool to see. So let's just go back. Let's go back and clear all these stuffs out. Let's just make this a little much cleaner. So let's put some of these back just there. All right, so from that being said, what we had was this UJ market, which was pretty, very bullish oriented. So from here we had, let me just clear these out. Try to remove these, and then we'll see what happens. Boom. So we had this very bullish UJ market with the creation of highs and lows, right? So low high there, high, and then low high, and then from here now price, we know that, okay, so from that creation there, we know that price is going to go down into an area of demand, of course, to do that mitigation before going bullish. Now lo and behold, look at what happened inside this area here. So price comes down into an area of demand, which is this original demand here, this original demand in here, right? The last overall down move before the up move started. Now with price coming here, let's look at what price, how price is going in the intermediary trend, of course. So price makes a low, a high, a low, a low high, and then a low with this break here. And then from here, lo and behold, this was nose coming into place, and then nose came and hit both ways, right? It hit bullish, hit bearish, just leaving wicks behind. So this was liquidity, and this was mitigation, right? And from there, so price breaks bearish, right? From this high here, price breaks bearish, and then instantly breaks bullish with this break of structure right here, with this body of a candle here, right? Not this wick here, right? No, we're not considering wicks in breaks, in structural breaks, right? So this high here was pretty much broken by this body of a candle here to make it now a proper break of structure. And from that break of structure, price had now performed our schematic that we just talked about, right? Price had just done this, right? Price broke price broke bearish, instantly broke bullish, and then the next thing we were going to wait for is that retracement towards an area of demand, of course, and take our entry to the top side. So from there we could just go back to the 1 minute time frame and see a potential entry presented to us in here. So from there we had an overall last down move before the up move, right, which we knew that mitigation was going to take place in, and that area being precisely this one here, right? It's rather large, but since it was news accompanied, that's why, and over refinement of it can mislead you. So price comes in, taps it, and then no real break to the top side, and price just drizzles around. So we now come to the session time, which is the London session. This, of course, this was just the Asian range, which was going to be liquidated. We know that we had these Asian lows here, which were taken out, and then we had these Asian highs, which are also taken out in due time. Now let's just focus on what we're doing. So price creates a low, a high, a low, a high, and then a low. So from there we had our break of structure here, a break of structure or a change of character to show us that price is now ready to push bullish. And from here we just needed to find that area of demand, which is this little man in here. So price comes in, mitigates, triggers our entry, and then price shoots to the top side. So let's just make this large and show you how the entry was. So this right here was our change of character. This right here was our change of character, and from that change of character we had a bullish entry with a minimal stop loss of 3 pips. I just adjusted it to 3 pips. And then an overall take profit target. You know, you know how crazy our R's can get. You know, the MMC footprint strategy is an absolute beauty. So I was looking to target this area here, which is that area of supply that I'm looking for price to come mitigate, and then from there we can now look for, you know, bearish opportunities. So this was a 3 pip stop loss with a 196 pip take profit target to make it a total of 1 to 65.5 RR trade. Now guys, I hope this video was very informative to you, and if it was, then don't forget to like, of course subscribe if you haven't, turn the bell button off for notifications, and until the next one guys, stay safe, have a nice trading week, and peace out.